Today, we're talking about uranium and what is happening in the country that actually produces 40% of the world's uranium, and everything's shutting down: the internet, the banking system. What does this mean for uranium and uranium stocks? And today, to discuss that, we have my good friend Justin from Uranium Insider. It is the best newsletter out there to understand what's happening in the uranium market and knowing what mining stocks in uranium to buy, what to sell, what to look for. I am a paying member of Uranium Insider myself. I have done gratefully quite well in uranium stocks over the last while, as has my mother-in-law, whose money that I manage, and she's headed right for a nice retirement due to uranium stocks in Uranium Insider. So I highly recommend you check out Uranium Insider. The link is right there down below in the description and pinned to the comments. So be sure to check out Uranium Insider right there down below. Give a shout out to our sponsor, Vizsla Silver, one of our favorite silver mining stocks. That's Vizsla Silver. Make sure you hit the like button on this video. Give us a comment down below. Let us know one thing that you are excited about in 2022 in the comments right there down below. And be sure to check out Uranium Insider newsletter right there down below. Hello, Justin.
Hey, Jake. Good to see you again.
Good to see you as well. So let's start it off. We've had Kazakhstan produces like 40% or so of uranium. Internet banking system shutting down. You and I were texting the first day it happened, and it didn't seem like it was getting that bad. But now you're having the president calling for people being shot. I mean, it's turning south pretty quickly out there. What type of effect is this going to have on uranium?
It's hard to say. I think that has a lot to do with how long this situation persists. It's definitely a fluid situation over there right now. It's getting nasty. It basically, this unrest sort of kicked off with the removal of a price control in the country for gasoline, and the prices basically doubled overnight, and people hit the streets. What seemed to start out as originally a protest around specifically, gasoline energy prices has kind of turned into sort of a populist revolution. It seems like the people are in the streets wanting to oust the government, is what it appears to be. The government buildings, the president's home, have been burned. The international airport has been occupied by the protesters, and the unrest seems to be moving out of the main cities into other cities throughout the nation. We're hearing reports today that there is major protest in Shimkat, which is the city nearest most of the Kazatomprom's uranium production. And so, and we're just hearing, just 10 minutes before we started this call, that we're now hearing signaling from Kazatomprom directly that they're expecting some interruptions, at the very least, to their supply chains. And so, and potentially shipments and things like that. The actual production of uranium in Kazakhstan is ISR production. And so it's basically a series of injection and recovery wells. They have to be drilled relatively frequently because once they achieve peak production, the production declines pretty steadily over time. And so, but once the wells are established, it's much less labor and personnel intensive for that production to happen. So if the well is established and it's up and running, and there's a steady supply of the lixiviant, which in this case is sulfuric acid, if that supply is there, it doesn't take a lot of manpower, let's say, to continue production in existing wells. And we're in the heart of winter right now. There's not a lot of well field development that happens in January anyways. So for the existing wells to keep running, it doesn't take a lot of manpower. I don't know the specific logistics on the importance of the internet, which has been shut off. I would assume it's quite important. I can only imagine the fallout from something like that in the United States or any other major Western country would be absolutely huge. It would be a number of days before that would mean literal survival, with the internet shut off at this point. So it's a bad situation. The president of the country is giving shoot to kill orders for the protesters. It's unbelievably scary. And so we don't really know where this is going. As far as the uranium market is concerned, 2 days ago, the market responded with a huge green day in the market. Record volumes came into the Sprott Physical Uranium Trust. All of the uranium stocks were up pretty big. The following day, we had two things happen. That was yesterday. One, Bear Traps report issued a sell signal or a sell alert for 1/3 of their Cameco position. And then you had Cameco actually come out and message the market saying, "Oh, don't worry, we have all this production we can bring online anytime." And the market didn't like that. And Cameco had to go, "Oh, wait, we didn't really mean that. What we really meant was, we don't know how long it'll take for us to bring this production online." And so I think that Cameco was thinking that their stock in particular was falling so hard. The date was that yesterday. That was yesterday, that they needed to message the market, and thinking that shareholders were selling Cameco because they were connecting their production at their Inkai JV in Kazakhstan to the sell-off. And of course, they had that completely wrong. And unfortunately, Cameco likes to put their foot in their mouth. They've done it over and over and over. However, they've come back today and said, "All right, look, here's the situation. We don't yet know how much Inkai is going to be impacted. We're not bringing MacArthur online until we have that contracted out." They reiterated that. They did mention smaller production that they have both in Canada and the United States that would still take a very long time to bring up and running, but they have that in their back pocket if the situation gets dicey. So that was sort of a message to shareholders, like, don't worry, even if Inkai is interrupted, we still have these other options for potential midterm cash flow. And also to the utilities, don't worry, if Inkai gets impacted from what's going on in Kazakhstan, we have other options for production out into the future. So really, that was just poor messaging on their part. And now the market today seems to be stabilizing. I think yesterday's sell-off was way, way overdone, especially considering the moves in the spot market the previous day. Spot market was up about 10% in one day. So it's kind of, the situation is dicey in Kazakhstan. And I think that if it persists, there could be some problems. And it's also just, Russia's also stepping up. They sent in troops to try to stabilize the situation. And it's possible that they end up taking a heavy-handed approach towards the country, a la, USSR type situation. And who knows how Russia taking over more control of Kazakhstan could potentially impact things for uranium production. If there will end up being tariffs on Russia-owned or Russian-controlled production, that would be huge. If Kazakhstan would be then considered part of Russian production, obviously that has big implications for the U.S. in particular. So it's just a very unknown situation in terms of how it will impact uranium. It's just impossible to say. We don't really like to trade and speculate around short-term catalysts. I'm not recommending to anybody to try and trade around this, to buy and then sell when things stabilize. Not something I would do. We still have a mid to long-term outlook. Either way, what this is saying to the market is that the biggest producer in the world has a really seriously unfortunate and messy situation politically and socially. And the importance of security of supply for utilities should be paramount right now, and more evident than it's ever been, because this producer has been very, very stable for almost 2 decades. And so this is a really big deal.
Yeah, in the least, it just shows you it's incredible, such a valuable commodity. Rick Rule has that famous thing that he always says is, you flip the switch and the lights don't come on if you don't have enough uranium. And what it does show is how incredibly fragile such an important market is. I mean, we already know it's in an incredible structural deficit, but when 40% of the mine supply comes from one country, and that country's having, a full out revolution, it shows you not only how delicate global supply chain for anything is, but something that is as imperative as uranium and the consequences of not having it, which is, just another example of why uranium seems like such an attractive investment over the next few years. So break us down What are you seeing overall and hearing overall in the uranium market for 2022? Any updates on Sprott? We've had talks about their New York Stock Exchange listing. You've mentioned that you think a lot more heavy hitters would be stepping up to the plate after holidays. So give us a breakdown on everything that's happening, Mr. Uranium Insight.
Sure. Well, with Sprott, they will be filing for their New York Stock Exchange listing this month. It may have already happened. They're probably not going to put out a news release around the filing of it. They expect that will take 6 to 9 months. It could come sooner than that, but they're just being cautious with that because it's a unique product. There has never been a physical uranium trust listed on the New York Stock Exchange. But we're confident that they will achieve the listing. They will get that listing, even if they do get some pushback from utilities, which they probably will. So that's in process. That's a big deal. That's a really big deal. It's just difficult to say when it will happen. People think it's going to happen in Q2. I don't. I'm shooting for Q3. Between now and then, there's not really anything in the market that I can see in the short term that will cause a negative impact on the price of uranium. This whole situation in Kazakhstan, like I said, I don't like to bet around it, but I don't see an outcome of this situation that is positive in terms of actual supply. Like, it's not going to lead to a supply increase. It's not going to negatively impact the uranium prices. And I'd hate to. I don't feel good about this. Like, people are dying in the streets. It's terrible. But the reality of the situation is that this is the largest producer in the world, and they're undergoing a very serious situation over there, and nobody knows exactly how it's going to pan out. So at the very least, that is a net positive for the price of uranium, and we're already seeing the spot market react to that. In fact, we've seen the spot market react positively over the last couple of days with Sprott not buying uranium. They're sitting on $100 million of cash right now. And we saw those record volumes come in 2 days ago into the trust. And so we have this trust established where funds going into it lead directly to physically purchasing of uranium. And we have a very thin spot market. We have the biggest producer in the world now telling the market that they're expecting some impacts to their supply chains. And we have a situation that's basically ripe for some really solid moves. Again, I don't know what to expect in the short term. I really don't. But I do think that this is the beginning of what is likely to be another very, very strong year. And I think that if you choose wisely with your investments, you can do extremely well. We had the URNM ETF last year. We had that perform at 79.1%, one of the best performing ETFs in the entire investing space. Our focused portfolio beat that by 46%. So we were up 122% last year, even with a 30% drawdown over the last 6 weeks of the year. So that drawdown has kind of washed everybody out, washed out all the weak hands. Now we have a new year. We've got institutions that are wanting to position in new positions that they believe will perform solidly for the year. And I think we're seeing a good start to that. Yesterday, obviously, was a very harsh sell-off that was surprising to pretty much everyone, myself included. And that mainly had to do with, not to mention that sell order, but Cameco's messaging. So now that has sort of been fixed, let's say, and we have a more clearer picture about potential impacts to Kazatomprom getting clearer by the day and even by the hour. It's likely that we'll see some big moves in the spot market in the coming weeks, in my opinion. In fact, I wouldn't be surprised to see it move up sharply today. So it's ripe for a short-term move, but again, I'm not positioning for that. We're 30% off the highs in the equities from November. I think this is a really fantastic time to position for what, in my opinion, is going to be a very, very another really solid year for uranium.
Yeah, who knows what happens with Kazakhstan, but what it does just show is really how delicate of a market this is. And it's kind of concerning for something that produces so much of the baseload power supply, not only in the United States, but in the world. I mean, the fact that 40% of all of it comes from one country
Yeah.
is not good.
Yeah, there's a fuel buyer that I speak with on occasion, and this was probably 18 months ago. So look at everything that's happened in the last 18 months, right? But this was a on one occasion where we spoke, where he was not in a panic over uranium supply. He was not concerned about utilities inventories, and still isn't, and neither am I. They're okay at this point, for the most part. The U.S. is uncovered going out pretty quickly here, but for the most part, inventories are okay. Supply had yet to really be impacted. Um, but I asked him to just sum it up. Like, okay, so how would you summarize like what you're seeing out there? Because he is, a uranium bull. He's bullish on the commodity rising in price. He's much more practical in terms of his outlook on the sector. But this was 18 months ago, and he said I would sum it up in one word: fragile. And that's somebody who knows this market better than anybody else that I know. He knows the ins and outs of the nuclear fuel cycle, all of the elements, all of the producers, all of the sellers, and everything. He described it as fragile, and that was back then. That was before COVID. That was before Cigar shut down. That was before Kazatomprom shut off their minefield development for 6 weeks. That was before anything that's happening currently, obviously. And so, yes, it's an extremely fragile market. The supply is coming from so few entities, and even utilities will spread out that risk if they're intelligent. And he is definitely one of the intelligent ones, where he will seek out supply. He'll divert from the cheapest to make sure that he's getting supply from multiple entities, right? If you go cheapest, you go Uranium One, which is getting a JV from Kazatomprom. That's going to be your cheapest supply, or BHP, because it's basically a bonus from their gold and copper production from Olympic Dam. But even if you diversify based on companies, you could get Kazakhstan supply from Kazatomprom, from THK, which is their trading house, from Orano, from Uranium One, from CGN. You could buy from any of these entities and have those pounds come from the same location. So diversity based on geography it's now front and center. So it'll be interesting to see if we see more demand and more contracts and more utility interest coming from projected U.S. supply, coming from Canada, coming from Australia, coming from Namibia, coming from Niger. That'll be interesting to see.
So you said URNM was one of the best performing ETFs. Uranium Insider newsletter beat it pretty substantially. So for everyone interested, link in the description and pinned to the comments. I'm a paying member. I suggest you sign up. But give us a breakdown on what are important things for one as a uranium investor that sees the potential in a market like this and is looking for an opportunity for asymmetrical gains.
Yeah, well, I think I think the responsible answer to that would be, I think some diversity is important. And obviously, if you just go for ultimate diversity and buy the ETF, then you still can do extremely well in a market like this, because it punches above its weight. I mean, it's so leveraged as it is, simply because of the volatility. The URNM outproduced the S&P by 3 or 4x last year, and S&P had a fantastic year. And so just buying the broad market indexes is kind of the classic, buy and hold and never look back type of investment. But if you can be a little bit more intelligent and focused in that, even by sector, you can vastly outperform it. So how did we outperform URNM? We had a couple very intelligently structured options trades that rolled off, creating huge gains. We had an options trade on one of the big mining development companies that has a decent options market that outperformed the actual miner by 4x. We have another options trade that's going to roll off in the next couple of weeks that hopefully, if the market stays moving like it is today and a couple of days ago, should be a really big winner for us. So that's one reason. Looking for risk reward where the risk is far to the downside. We these options trades, we look for at least 2-to-1 risk reward, or reward to risk, I should say, and ideally 3 or better. And so that's what we look for in options trades. And then with the individual miners, so that 122% that was our year to date for 2021 return for the entire, that's the whole portfolio wide. Within that, we had a couple of stocks that went, 3+X over the year. That was just in the single year. And so how did we find those companies? Basically, that's our process. Our process is to find the companies that have management that is going to execute. And it's difficult to really line out the actual elements that I can describe to you what makes me confident in somebody, what they say they're going to do, that they actually pull it off. I don't really know how to describe that. Obviously, if they've done it in the past, that's one thing that's helpful. But there's plenty of managers in this space that have done well in the past that are operating companies right now that are vastly underperforming. And so I think that you have to trust management, you have to understand their goals, and you have to understand the achievability of those goals and the likelihood of them to achieve those goals. I mean, that's probably number one. Our biggest winners have been those companies where management says, well, this is our plan. This is what we plan to do in the next 12, 24, and 60 months. And if you think that they can do it, and you invest in them and you trust them and they've been respectful to shareholders and they execute during that time, great. There's been a couple of positions that we've dropped that we initiated when we first started the newsletter, August 2019. Management had signaled they were going to do X, Y, and Z. 12 months passed, nothing had happened. The stock was underperforming and we bailed. And so we can be very cutthroat with positions if management is not executing in the way that they say they're going to. So that's really the big one, is the jockey, not the horse, right? Then, of course, obviously, with what's going on in Kazakhstan currently, with what has happened in Spain with Berkeley, for example, the country has denied their permits to mine. That stock tanked on that news. You have to diversify based on jurisdiction. So we have a smattering of stocks. We have 10 positions. One of those actually right now is options, an option. We have 10% cash. That'll be 20% cash shortly. If the market stays weak, once that cash rolls off, we'll likely position with some of that cash. But really the process is all about the jockey. It's all about weighing jurisdictional risks. You want to be in a jurisdiction where at least there has been uranium production in the past and there's likely to be in the future. So a company that can go from either discovery or an already pre-established asset and actually execute on bringing that asset into development and or acquiring other assets. Those are the companies we like. Then, of course, you got to dig into the balance sheet. You need to look at the share structure. You need to look at the cash. You need to look at the historical dilution, et cetera, et cetera. And then there's incalculable things. There's some stocks that are just strong for reasons that defy logic. Those things matter. I mean, there's something like the Australian stocks. They held up better than most of the stocks in the space in this past correction. Some of them didn't even go near their 200-day moving average. Why? I don't know. The Aussies are pretty voracious uranium investors and resource investors in general. So it's good to have a certain amount of diversification, but focused enough that you can find at least some of the gems, some of the diamonds in the rough to really bring that total portfolio performance up.
Okay, so let's talk a little bit about the macro environment. We've got a significant structural deficit. There is not enough uranium being produced, and we're consuming more and more of it. It's pretty much the only apolitical thing that's out there that everyone agrees on is needed for net carbon, reliable energy. We're having energy crises all over the world. So macro, between supply and demand, between the global political calls for it, couldn't be better, right? Then when you look at Eric Sprott and Sprott getting involved, you've got one of the biggest natural resource investment firms in the world that has stepped in. They have been buying a lot of uranium in a market where we have a tremendous supply and demand deficit. So, you go down the checklist and it's just something that makes a lot of sense. Then you go into um, the major listings. We've talked about Sprott earlier and a New York Stock Exchange listing. And, you were saying sometimes stocks just for whatever reason, they defy logic. And one of the things that has been interesting to watch, whether it's when silver really moved, or when uranium was really moving, is the very few stocks that are on the New York Stock Exchange. Because there's a lot of people that, quite frankly, they do not invest in OTC, and so you've got a couple stocks to pick from, basically, on major exchanges for uranium. What would be the effect on the uranium market and Sprott specifically if and when they get that New York Stock Exchange listing, and how could that affect the spot price of uranium?
I think the effect's going to be huge. I honestly do. It's, I think one of the primary reasons that some of these standouts, like you mentioned in the precious metal space on the New York Stock Exchange, have performed so well has to do with liquidity requirements. And large institutional investors have to have sufficient liquidity to trade in and out quickly. That's a basic requirement. They cannot get stuck in a small cap that's tanking and literally cannot get through the exit door. That's not an option when you're managing money. So liquidity is the primary concern for an institution. And Sprott currently has, the Sprott Physical Uranium Trust currently has pretty decent liquidity on the TSX, but it pales in comparison. I mean, when you compare the TSX to the OTC, obviously it's night and day. The New York Stock Exchange is 13 times larger than the TSX, and the liquidity is 13 times larger than the TSX. And so you also have certain institutions that may or may not want to invest on the TSX that are based in the States or that are based internationally. They want the liquidity of the New York Stock Exchange. And so that's the primary. What's that?
It has like a psychological component too. I feel like once you see it on the New York Stock Exchange and you see big old Sprott there, it has like a different, for a lot of money, it has a different psychological appeal.
For sure. And then you also have the possibility of an options market for the Physical Uranium Trust. I mean, if that happens, and I think that it will, that is game on, because what happens is when you buy call options, let's say the market makers sell you those call options and they can't be net short. They have to buy the underlying common stock to balance out that net short position. So when you buy call options, the market makers buy the underlying stock because they have to sell those options and be short, and they won't be short. So options markets just massively amplify the movement of stocks, massively. And so that is likely to happen as well. What is it going to do for the spot price? At this point, the institutions know big money going into the spot and into the Physical Uranium Trust move the spot price. They know it. So it's going to move it up. I mean, there's no other way around it. The spot market is thin. There's not a lot of supply just sitting in the can above ground now. It's so illiquid that any purchasing in the spot market is moving the price. Seeing small volumes move on days when Sprott is not even in the spot market and the price is moving up. So it's very illiquid. There's not a lot of inventory, and there's not much production coming into the spot market on a regular basis. Like I've mentioned before, maybe 1.5 million, 2 million pounds, maybe a bit more. Of course, if the markets get severely backwardated again, they're slightly backwardated now. We've got $46 spot uranium. We've got $43 term uranium. Is that enough of a backwardation for carry traders to sell their pounds into the spot market and scrape a couple of dollars a pound? Maybe not. But if we get to a $10, $15 backwardation, then we're going to see some pounds come from the carry traders sold into the spot market. And that will likely keep the spot price from going to the absolute moon in the short term. But there's two important things to understand that are probably going to happen They are going to happen this year. One, we will likely see enough volume come into the Sprott Physical Uranium Trust to move the price up to a level of backwardation that is going to shake out more pounds, potentially all of the pounds that are in carry that are willing to be sold into the spot market in a backwardated market. Okay. So that's our buffer. That's the spot market backup right now. Whatever's held in carry. Okay. 20 million pounds, 25. Sprott purchased that in 3 months last year. So when we have volumes come into the Physical Uranium Trust, it's going to move the spot market up. If the term market doesn't follow quickly enough, it will be backwardated. As carry traders will sell in the spot market, cash that out, secure midterm contracts. Although this gets tricky because a lot of those midterm contracts at that $43 a pound now were coming from Kazatomprom, coming from Kazakhstan, coming from Uranium One, from THK, from Orano. So that situation could be less secure, and we could see the term price, at least the midterm price, kind of shoot up. But going back to what I was saying, what I expect in 2022, backwardation in the spot price versus the term price on the forward curve is likely to shake out more, if not all, of the pounds held in carry that are able to be shaken out. That's one. And once that's gone, we don't have another buffer in high volumes to keep the price down. Maybe some supply in Japan, but it's not going to come flooding in, and it's not happening until we're at $20, $30 higher in the spot price. Okay. At least. And there's no guarantee either, because Japan's restarting at a pretty decent pace. Okay. That's number one to understand. Number two, the New York Stock Exchange listing. It's possible that these two things coincide. It's possible that the next 6 months we get a nice pump, that we get some backwardation and some carried pounds shake out in the spot market, and that buffer dissipates, and then we get the New York Stock Exchange listing. And then we have institutional money come into the trust via the NYSE, and that spot market buffer is gone. And that's the point where I think we could see really, really strong and fast moves in the spot price. And so, in my opinion, based on all of that, I think that right now and out, let's say, over the next 6 months, if the market gives us dips, and if you're not already positioned, that's the time to get aggressive. If you're already positioned, just sit back and chill for 18 months to 36 months. This is basically what I'm doing.
Fascinating. I didn't think about that. I guess that's why we have you on. For everyone listening, if you haven't signed up yet, I highly encourage you to sign up to Uranium Insider. I think this is going to be a life-changing market. It's going to happen quick. That backwardation's I never thought about that. That's pretty interesting. So it's almost like that's a good thing because it shakes out additional pounds, especially if it coincides with a New York Stock Exchange listing for Sprott with increased liquidity to buy out, remaining inventory simultaneously.
Yeah, and those pounds being shaken out through that reverse carry trade, as Art Hyde from Segra likes to call it. Those aren't just like pounds floating around coming from anywhere. Those are pounds that are borrowed from the future. I mean, they're covering those pounds by securing midterm contracts to cover their own contracts that they've signed with utilities to carry those pounds to deliver to. So to the extent that pounds are shaken out in the spot market, I'm all for it. I don't care if the market doesn't fly to the moon next month. I really don't. It's not how I'm trading. This is a long-term investment. So if this situation shakes out pounds from carry and pulls those pounds from the midterm, fantastic. Those are pounds that are coming out of the market. Every pound that Sprott purchases, whether it comes from spot market, whether it comes from a carry trader shaking out pounds, doesn't matter. Those are pounds not coming back into the market. And those are pounds taken from the future, essentially. So the setup is unbelievably ripe. So I wanted to mention a couple of other things since we last spoke, if that's okay. Most of your listeners probably already follow Uranium on Twitter and follow Uranium in general. So they might already know this, but the EU draft taxonomy includes nuclear now. That was something we were speculating on for a long time. It does include nuclear, and they included natural gas, strangely enough.
What's the significance of that?
The significance of that is mainly twofold. The significance of nuclear being included or gas being included with nuclear?
Nuclear.
Okay. So the significance of that is that one, nuclear projects going out through, I think it was 2045 that they extended this out to, will be allowed to have low cost green financing within the EU. So access to capital vastly improves for nuclear projects in Europe. So that's one. Number two is that nuclear will then have the kind of official green stamp of approval in general. And so what that means is investments in nuclear, investments in uranium can qualify essentially for ESG funds. So ESG funds, especially in Europe, can invest into the space. So we should see more green ESG type investment capital come into uranium and come into nuclear. It was really smart, actually, that they included natural gas, because to vote no on this, which there will be probably some no votes coming from Austria, maybe coming from Germany, although Germany needs natural gas. But if you vote no, you don't get any of it. And so in order to oppose nuclear being included, which you'll get opposition from Austria, from Spain, possibly from Germany, maybe a couple of others, they'll lose out the benefit of having natural gas included in the EU taxonomy, which would have the same benefits as far as access to green financing. So that's a pretty big deal. That won't be actually solidified till later in the year, but the fact that it's included in the draft, and they actually need a 72% no vote in order for it to be canceled. So it's basically going to happen, and that will begin January 2023. The other thing, when you mentioned supply and demand, is that UXC, which has been one of the more conservative nuclear fuel consultants historically, is now kind of starting to sound the alarm a little bit. So they're actually saying that they expect 200 million pounds of demand in 2022, which sounds high, right? I mean, the consensus is really about 185 million. So they're including inventory restocking in that number. So they're expecting 200 million pounds of actual global demand for 2022. And the actual production is 135 million pounds. So now they'll include, they'll add secondary supply to that, right? So secondary supply
is included in the 135.
No, that's primary production.
Oh,
and who knows, that could be impacted further by the situation that we're seeing pan out right now in Kazakhstan. So 135 might be generous for this year.
I mean, how much longer can you have a net negative in demand and supply until this market explodes?
That's a great question. I don't think that much longer. Okay, but I want to make a point on that supply and demand number from UXC. Okay, 135 primary supply, 200 demand. They'll add secondary supply. What is secondary supply to UXC? Secondary supply is not only underfeeding and tails reenrichment, which is actual secondary supply, but they count inventory drawdowns as secondary supply. They double count. So pounds that were produced 5 years ago, they counted that as supply. And now when they're being drawn down from inventory, they're counting it again as secondary supply. It's absurd. Does it act as secondary supply? Can a utility draw down their inventory instead of buying new EUP from Russia or whatever it might be? Yes, they can. It acts as secondary supply, but it's double counting. It's not real secondary supply. Even though they do count that, they'll count 27 million pounds this year in secondary supply. Actuality is more like 15 if we're talking about underfeeding and tails reenrichment. So let's say 150 million pounds primary supply plus actual secondary, 200 million pounds in demand. But that demand number doesn't and can't, because it's impossible to predict, include secondary demand. It doesn't include the demand that's going to come from the financials. So Sprott purchased 23 million pounds in 2021, in 4 months in 2021. What are they going to do this year? Nobody knows. You can't model that. That's on top of 200 million pounds.
If they, let's say hypothetically for easy math, they buy 50 million, they get a New York Stock Exchange and they buy 50 million pounds. So then that moves the demand to 250 in that equation.
Correct. Yeah. And I think honestly, I mean, 50 million is possible, but if we see the price rise substantially, obviously that's going to mean less pounds purchased per same amount of capital. But who, if we see the New York Stock Exchange listing, all bets are off. So what we have modeled out is very conservative. We've modeled out between Sprott, between Yellow Cake, between any other financial players that might be purchasing physical, between maybe we'll see some more, development companies buy physical like we did last year. We figure there could be about 30, I think, what do we model? 37 million pounds conservatively. So we think,
237.
Yeah, 85, 90 million pound deficit 2022.
Wow.
Between primary supply, secondary supply, not including drawdowns, and actual physical demand plus financial demand.
I mean, how long can that go on before the price goes to $200? I mean, it's so mind blowing. And that's why I unabashedly tell everyone sign up for Uranium Insider. That's why I promote it hard, is because I think this is one of those things that is going to be once in a lifetime. I mean, just think about this. You do not want to miss this. You want to sign up for Uranium Insider, link in the description and comments. But I mean, how much longer can that go on? I mean, that's incredible. I mean, we're not talking about some random unimportant thing. I mean, we're talking about a pretty important thing.
Yeah. Yeah. And all of those supply and demand metrics are stacked on top of, growing positive sentiment and support for nuclear pretty much everywhere. I mean, Germany is still shutting down the reactors against all odds during an energy crisis. You can't make this stuff up. But you have China going, balls to the wall, just building. They have 18 nuclear power plants under construction right now. They just fired up their first SMR. They're going all out SMR. They're planning on building 150 reactors in the next 13 years. So how long can it go on? Not that much longer. Like I mentioned, I think I laid it out pretty well in terms of what we could see. We see some good volumes come into spot and the market gets backwardated. That's really our only buffer, is those carried pounds. And again, those aren't just excess pounds sitting around. Those are pounds that are being taken from the midterm market. So really, any slowdown over the next 12 months, let's say, that might come from carried pounds coming into the market only makes the next move more parabolic, because there's fewer pounds available in the midterm.
That makes a lot of sense.
I really think that this market is going to blow away everyone's expectations. And when people hear me say things like this that are so bullish, that doesn't mean I expect you to go into the market and put all of your savings in today and think it's going to move tomorrow. That's not the way to play this. Don't trade around this Kazakhstan situation. It's one thing that adds to the fragility of this overall market. And the fragility is what you need to understand, because that is what will move the price substantially when we see flows come back in a big way. And we will see those flows come back in. I think that we're going to see a rotation out of the classic growth sector, stocks, and into the value sector. And is there anything more valuable than a tightly traded, very thin market commodity that's essential for energy? The moves are going to be big, and how long can it go on? I don't really know, but I don't think it can go on that long. I expect those carried pounds, if we see a backwardated market, will flush out to the extent that they're going to flush out, and then the New York Stock Exchange listing. So I wouldn't want to not have a seat at the table by, mid-tier this year. And honestly, right now is a really good time to position because of the sell-off that we saw in December.
So that's Justin with Uranium Insider. We want to thank you for listening. Encourage you to go to link in the description and comments right there down below. Go ahead, sign up for Uranium Insider. At least open up the tab and give it a read. I'm a paying member myself. I highly recommend that you go ahead and sign up. This is one of those markets that when it happens, it's going to happen quick. And as Justin said, you want to see it at the table now before those seats all get taken. Make sure you hit the like button on this video, send it out in the YouTube universe, subscribe, bell notification. Justin, any final words?
No, I don't think so. Other than, if you have a long-term outlook on the market like we do, and you have pullbacks like we just had, we just continued to message to our members of Uranium Insider that this is an opportunity. If you're just coming to the space, if you're still adding tranches of your positions, keep that long-term outlook, zoom out, look at weekly charts, take a deep breath, trade opposite your emotions. When things look really terrible and your stocks are selling off and you're 30% down from your highs in November, that's the time when you should be buying. And so I think whatever weakness the market might give you in the coming months, take that as a blessing, because Sprott Physical Uranium Trust is about to be listed on the NYSE and have access to 13x the capital and liquidity. It will move the market. It will move the market. So keep that in mind, and be well. Happy New Year, everybody. Prayers to the people in Kazakhstan. Honestly, I think that they're fighting for democracy and freedom, and all the more power to them, really. And hopefully everybody stays safe.
Just wait till Jim Cramer's on talking about Sprott. Everyone, go get Sprott. So it's going to be an interesting time. I want to thank you for coming on today, Justin. Encourage everyone to go to the link down below and in the description to check out Uranium Insider newsletter. We want to thank you for watching today, and we'll talk soon.